I said I would go live after the Fed made a decision today on rates. They decided to raise rates 75 basis points or 0.75%. So 0.75% or 0.75. So they raised rates, and that was higher than they anticipated. They anticipated raising rates 0.5%, but they went even higher because inflation is so bad that they want to put the cap on inflation as quickly as possible. So not only have they raised it a 75 basis points today, they are signaling as well that they may raise it another 75 basis points in July. So what does this mean for you as a buyer? If you're a buyer in this market, let's talk about it. But first, I want you to see at the end of the press conference today, one person asked about the housing market. And so I want to play that question and the answer in its entirety. It's about 2 minutes or so. And then after you watch it, I want to discuss what he said. Please excuse the banner on the bottom. It'll go away after the first 30 seconds or so. But when I recorded it, that advertisement was there. Let's watch.
Chairman Mark Hamrick with Bankrate. Wonder what your assessment is about the outlook for the housing market, given the years-long increase in home prices and now the sharp rise in mortgage rates. And all that, of course, given the heightened sensitivity around the housing market, given the fact that it was a trigger for the great financial crisis over a decade ago. Thank you.
Sure. So rates were very low. A good place to start is that rates were very, very low for quite a while because of the pandemic and the need to do everything we could to support the economy when unemployment was 14% and the true unemployment rate was well higher than that. So, and that was rates are low, and now they're coming back up to more normal or above levels. So in the meantime, while rates were low and while demand was really high, obviously demand for housing changed from wanting to live in urban areas to some extent to living in single-family homes in the suburbs, famously. And so the demand was just suddenly much higher and low. So we saw prices moving up very, very strongly for the last couple of years. So that changes now, and rates have moved up. We're well aware that mortgage rates have moved up a lot, and you're seeing a changing housing market. We're watching it to see what will happen. How much will it really affect residential investment? Not really sure. How much will it affect housing prices? Not really sure. It's obviously we're watching that quite carefully. You would think over time. So there's a tremendous amount of supply in the housing market of unfinished homes, and as those come online, whereas the supply of finished homes, the inventory of finished homes that are for sale is incredibly low, historically low. So that it's still a very tight market. So prices may keep going up for a while, even in a world where rates are up. So it's a complicated situation. We watch it very carefully. I would say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together, and where inflation is down low again, and mortgage rates are low again. So this will be a process whereby we do our work in a way where the housing market settles in a new place and housing availability and credit availability are at appropriate levels. So thank you very much.
All right. So he said a lot. So I want to go over some of the things that he said so we can discuss it. Please put some questions in the comments as well as to what you thought about what was said. So one of the things that he said was not really sure what will happen watching it, because he talked about supply, that we don't have a lot of supply of resale homes. He said finished homes. So resale homes, we don't have a lot of supply of, so rates may go up. But at the end, he was when they asked, he said about young people purchasing houses, but he did say, not really sure what will happen watching it. And that's what I want you to do, because I don't think anybody is totally sure exactly what's going to happen with the housing market. We haven't been in this situation ever, like pandemic and rates rising quickly and rates down and the job market is good. This whole scenario hasn't happened before. So I think nobody knows exactly what's going to happen. However, he's very clear as to what he wants to happen. He says, home buyers, you need a reset. He said, if you're a young person buying a home, and I think he kind of stopped because, I mean, if you're a young person, old person, middle-aged person buying a home, it's difficult. But he does know that young people usually have less, they're usually first-time home buyers, and they have less money to put toward the house, the down payment, all of those costs. But he said specifically, home buyers, you need a reset. So he's saying that he's pushing, not only is he trying to push inflation down, but he's going to keep on raising these interest rates until there's a reset in the housing market. I thought that piece that he said was very telling. He said, until the housing market settles in a new place and rates come down. So watch that part again. But he said housing market settles in a new place and rates come down. And then prices would have to come down or adjust as well in order for it to be a reset. Now, when this reset will happen, nobody's sure. So I just thought that was very interesting that he said that. He also said, again, supply of unfinished homes were high. And I think he's saying that because builders still can build. However, we're still behind on building as well. And I think if builders don't have, they're low on supplies, and if they don't have contracts in place, then they're not going to keep on building. So I don't know if, they may finish out what they have, but I don't think if enough people pull back in a certain price range, then I don't think they're going to continue to build. So this is very important that he said this. And he also, of course, said finished homes are historically low. Finished homes are historically low. That's what I meant by that. So resale homes, as we know, are historically low. And the higher interest rates go, of course, there's less and less incentive for somebody that has a resale home to list their property to buy a new one that's going to be more expensive. So I don't think this inventory is necessarily going to come from resale homes. Now, some people, again, I believe because it's seasonal, people want to sell around this time, people want to buy around this time, people are listing their properties more than they did prior. And also home sellers are watching the market as well, thinking this may be their last opportunity to get the best price. So you are going to have new listings hit the market in reaction to these higher rates. And so in closing, I just wanted to say your numbers have to make sense. In my last video, if you haven't watched the video that I did yesterday, I want you to make sure that your numbers make sense. So you can buy a house at any time if your numbers make sense. So is the mortgage, even with the higher rates, is your mortgage 25 to 35% of your take-home pay? And I'm also going to give you three websites that I recommend during this volatile time for you to look at. So is your mortgage everything? When I'm talking about mortgage, anytime Shaheedah Hill is talking about a mortgage, I'm talking about taxes, insurance. So principal, interest, taxes, insurance, mortgage insurance, if you have to pay mortgage insurance, and any HOA fees. I'm talking about the entire payment. So you want to try to keep that 25 to 35% of your take-home pay or as close as possible, because you want some wiggle room just in case things change for you financially. And you also you have other bills, you have other responsibilities, and you want to leave some money to invest for the long term. Number two, you also want to make sure you have a 6-month emergency fund. You want to make sure you have an emergency fund that once you pay your down payment, you're not broke, because we may be getting into a recession. That's a risk. If they tell you there's a 50% chance of rain, then you're probably going to bring an umbrella, and you have to prepare financially for the possibility of a recession. So you want to make sure you have enough money. And also, if you go back, I'll put a link to the video, the complete press conference below. He talked about wanting the unemployment rate to actually rise to get more people out of the economy, to stop labor from being so tight. So he talks about that. So you can anticipate some layoffs coming in the months, ahead. And then I want you to live in this house, plan to live in this house, minimum 5 to 7 years, minimum 5 to 7 years. Also, if the only way you can afford this house is with an adjustable rate mortgage, I wouldn't get it. If you know that you're only going to be living in this house for a short period of time, you can't always say, well, I'll just refinance. I'll just sell the house. What if, you can't sell the house? What if the interest rates are higher and you can't refinance? You don't know. So I want to make sure that you're being smart about any adjustable rate mortgages to afford this house. If the only way you can afford the house is through an adjustable rate mortgage, I probably wouldn't buy. I have a video on adjustable rate mortgages because I did one. And I have a video about that. Let me get to the websites that I recommend. I'm going to share this with you. Okay, I'm sharing. I want to share 3 screens. Hopefully this is working. One is Mortgage News Daily. It has daily and it updates throughout the day. That's what I like about it. So rates actually went down today, which is a good thing in reaction to the Fed. So it updates as the day goes on. So one of the websites I recommend for updated mortgage rates is Mortgage News Daily. Yesterday, mortgage rates were about 6.28%. Today, they are 6.3% or 6.03%. I also like the Mortgage Reports Daily. The thing about this is they come out with updates on the mortgage rates once a day. So in the morning typically, and they'll have what they have as the average mortgage rates. But what I really like about this is it gives you some insight into if you should lock your rate. So they give you a mortgage rate lock recommendation, and they also talk about why they're giving you that recommendation. So I like that. It talks about the Fed and what's going to happen at 2 o'clock. It said this afternoon could send mortgage rates higher, lower, or nowhere. In the meantime, my personal rate lock recommendations remain this. And it's been this for a while, but if you go down, they also explain what else is going to impact mortgage rates. So it's really some detail as to where mortgage rates are going so you can understand. So I like that website. And then lastly, this website, which is consumerfinance.gov, it has a lot of good information, but one of the ones I really like, it tells you the average interest rate in your state. So Alabama is in alphabetical order, but you can go to Indiana, you can go to whatever state you need to go to and check out the average interest rate. You can put in your credit score. Is it credit score? Hold on. You can put in your credit score here. So if you have like a lower credit score or a higher credit score, you can put in the price, your down payment. You can put in the type of mortgage it is, and they'll tell you what the average rate is in that right here. The average rate is in that state, and the lowest rate people are getting, and then the highest rate that people are getting in your state. So I like all of these websites for you to be knowledgeable about what's going on in the market. So I hope this was helpful. Please put any comments below. Please like and subscribe to my channel for new videos every week.